How are you looking at the RBI's crackdown on the non-banking financial sector, and how big a risk really is it in India, especially the NBFC space, not so much the formalized banks?
Thank you, Tanveer. Good to be back on your show. Before I take the question that you've just posted, let me just quickly highlight our broad views on the sector. So we actually turned cautious on the sector about sometime last month, basically on three factors. One, clearly there is a headwind to the earnings that we feel the sector would be facing, driven by an elevated cost of funds. That clearly is a big challenge that the banking sector is facing. Number two is the rise of unsecured lending in the whole system. And clearly, the down cycle on the asset quality side may have started in that particular segment. And third, clearly the need to expand more capacity to garner more deposits in the future. The question that you just posted clearly has its root also in the unsecured lending that RBI has been talking about for the last couple of months, that there has been unbridled growth in that space. And also for the NBFC space and the banking sector, there is a interconnectedness. And clearly, regulators have been trying to stay top of the course and trying to make sure the compliance norms are properly followed. We also have written to our investors in our various research reports. The growth in unsecured loans doesn't exactly, find its way into the consumer growth that we are seeing. So there may be some episodes of, the funding maybe going away from the consumer spending. So clearly, I think what regulators are trying to do is to make sure the system is well protected and fairly in advance.